Okay, thank you for the introduction. Good morning, everyone. How are you today? Good. So tired, eh? Been long journey with this international week. Let me introduce myself before we start with today topic of the implementation issue of the IFRS adoption in Indonesia. So as you can see from the slide, my name is Singgih Wijayana. Some of you probably familiar with my face. You have taken my class before, several of you I can see. So I'm a faculty member of this accounting department, Faculty of Economic and Business here, and at the same time I also member of Indonesian Financial Accounting Standard Board, the board who responsible to set up accounting standards that are used by publicly listed firm for their financial reporting. So I do hope that my experience in the Indonesian Financial Accounting Standard Board can be shared to you through this business case study. And before I start, once again, my background is financial accounting actually, and I graduated from Monash University in 2012, and then I also a member of IWEEK, International Association for Accounting Research and Education and Research, and I also a member of Deloitte Scholar, a scholarship that given to 5 young faculty members around the globe, and I've been experiencing a lot with this international community and also people who focus in their financial accounting issues. Now, before I start, I want to know the background of you. Please raise your hand. To you with the background of accounting. Okay, and then the remaining is in this faculty in the School of Business, but not in the accounting major. And I heard that one of you from Visipol. So I believe to some extent you know and understand about accounting when you took introduction to accounting subject. But let's go a little bit more detail into macro perspective of financial reporting and also micro perspective of financial reporting. So because only some of you has the accounting background, let me before I bring this slide to you, and I believe you have received this slide before, right? You have received and hopefully you have read the slide, and also I give you one article where with this article I hope you get a little bit more insight in terms of how this issue occur in Indonesia, and hopefully you get something from this article. So this implementation issue of IFRS adoption in Indonesia, I write a paper together with Evi Rahmawati and Professor Mahfud Solihin, and I gonna present this paper into the AAA annual meeting the next 2 weeks at San Diego. But the thing is that this is kind of scenario that can be used into the class subject, and therefore at the end of this class you will be asked to do some little bit kind of mini research, then that hopefully it will give you big benefit in terms of your understanding about financial reporting in Asia in general, or Indonesia in more specific. Please raise your hand if you have any question. Raise your hand. You can ask any question at any time. And I will give you the opportunity to ask a question. So I just deliver what I want to present to you, and you can just stop if you want to raise a question. Okay. Now, I want to talk a little bit more general before going detail in this case. Please help me with the with the second slide. Have a look in this slide. This is the map of globalization of accounting standard. So you might aware that as the technology come along with interconnected business from one country to the other country, and then talking about financial reporting, we have the same issue. Now, financial reporting is now tend to be ruled by one accounting standard, which is what we call it as International Financial Reporting Standard. We just mentioned it briefly, like IFRS. The dark blue color, that's the country that have adopted IFRS at least since 2005. And then the light blue color, the one that hasn't decided to use IFRS in terms of they have their own accounting standard. In this case, you can see in that part of the United States. So the US use their accounting standard different with other countries, and they call it as US generally accepted accounting principle. Right? And then the white one, the one that tried to convert with IFRS. So this country, they haven't decided to fully adopt. We call it fully adopt. It means that they use entirely whatever accounting standard issued by International Accounting Standard Board. So IFRS is issued by International Accounting Standard Board, and this is they are adopted by most of the country with this dark blue color. So as you can see, Indonesia is in the map. You can see Indonesia is in a white one, right? It means that Indonesia hasn't been able to fully adopt IFRS until now. So the approach that the Indonesian use is more likely to like a converging. So whatever we have now try to be converged gradually into global financial reporting, into IFRS. So in this case, of course, we know there are some similarities, some different in terms of accounting standard that are used by publicly listed firm, right? And of course, you are questioning what is the driver of this globalization of accounting standard. As I mentioned before, it is about business. So, but I will describe it to you into two things. The first one is related to cross-listed firm. It means that like multinational company that trying to gain capital from other capital market. For example, Indonesia has telecommunications, PT Telekomunikasi Indonesia. This company is publicly listed in the New York Stock Exchange. Besides, they are also publicly listed in Indonesian Stock Exchange. So this company tried to get capital from US investor. Right. That's one example of an Indonesian company. And I can just mention one example because only one Indonesian company publicly listed at overseas capital market. But then you can see also described in that slide about 7,000 listed company in Europe switch and use IFRS. Why? Because they are hyper connected each other in terms of business and their capital market and the capital resources. And yet more than 1,000 multinational company also publicly listed in the United States. So other than telecom, there are more than 1,000 company across the world. That's from Australia, from Mexico, from Hong Kong, from China, from Switzerland. They are publicly listed in the United States. So imagine if in the United States, many multinational come trying to get funding from investor in the US, and they have their own financial reporting. So for the US investor, they will face more than 1,000, if it is come from more than 60 countries, they have to read financial statement based on more than 60 countries, and that's make very difficult to investor to correctly invest their money into the company. So in that case, then the need to provide one global single accounting standard become in high demand. So and as you can see, if you search through the internet, you will find start from 2002 IOSCO. This is like in organization that part of exchange commission, and every country having one organization, what we call it IOSCO, try to endorse every country to use IFRS and try to build one global high quality accounting standard, and we call it as IFRS. And then that's the first one, talking about capital allocation across the world, become cross listed is trying to get funding from other capital market, right? And then the second thing, probably easy for you to see, if you have a look in the context of your daily life, you might find the product that you use in daily life, like soap or toothpaste. That's product of Unilever, right? Unilever is originally from where? Netherlands, right? And probably if you can see, some of their major company will come from UK, and their product is come here. It means that they done what we call it as foreign direct investment. If you go out, look at the street, you find so many cars with like Toyota, Mitsubishi, or other company. It means that this company is actually has at least marketing side and selling their product in Indonesia. So they become subsidiary of their home country, and therefore if they're doing business here, it means that they have to report their income, their revenue into their home institution. And imagine if they need to prepare it using Indonesian accounting standard requirement, while their home country using their own accounting standard requirement, it is very difficult for them to consolidate this information to become one similar accounting information. And therefore then the need of globalization of accounting standard cannot be avoided. Most of multinational companies have to use this IFRS, International Financial Accounting Standard. And then the last one I can say, you might also aware about G20 countries that has fast growing in terms of economy. They every year have a meeting and try to commit with doing business together or cross investment from one country to the other country, open business and make the agreement. And of course, with the situation, you would expect the reporting has to be similar. And therefore, Indonesia as part of G20 country, they also commit to get fully adopt IFRS for the preparation of financial reporting. But now what happens if then every country need to prepare their financial statement? Let me bring into one case in Indonesia. So this is the overtime roadmap of Indonesian plan to fully adopt IFRS. So the original one, Indonesia plan to fully adopt IFRS by 2015, but then we have a lot of issue, and one major issue is of course about language. by regulation, every formal document in Indonesia need to be presented in Indonesian language. When we talk a fully adoption, it's mean if you want to have a the same meaning, the same purpose of reporting, accounting standard that I use this preparation of financial reporting, you need to also adopt this English one. Otherwise, if you translate it, you might have a problem in terms of different meaning when you mention one account and financial reporting. And it's happened. That's one major problem. But have a look what we have done so far. So as a member of Indonesian accounting standard, I have involved in the standard setting process, due process. So the approach we use to trying to convert Indonesian accounting standard into IFRS is by like taking this IFRS accounting standard, and then we evaluate them based on Indonesian circumstances, whether this accounting standard can be applied in Indonesia. With at the same time, we have a supporting technical staff that helping us translating this accounting standard into Indonesian version. And also we communicate routinely with a member of International Accounting Standard Board when we have problem of bringing or applying international accounting standard into Indonesian context. Now, and it is started since 2008, and if we back originally, we actually have followed IAS, International Accounting Standard, the previous version of International Accounting Standard, IFRS. We start follow IAS since 1994, but then we have never updated the accounting standard until 2008. But then the pressure of using IFRS are increasing, and therefore then there was an event to create public commitment whether the industry, whether the standard setter, whether the Indonesian Financial Service Authority able and wants to adopt IFRS for the preparation of financial statement. And then December 2008, the commitment was created. Start from that, then we trying to follow IFRS, and what we divided into two periods. The first period is like massive changes. I will describe you later on what we have adopted, and then the second period is trying to have annual improvement, and then following whatever the IASB issued, and we trying to maintain 1 year gap. So, and with the second period, we actually try to have a fully adopted by 2015, but until now, as you can see from the IASB website, we haven't been able to fully adopt IFRS until now. Now, have a look what we have done in the first period. We have issued more 40 financial accounting standard and also 20 interpretation of this accounting standard, plus issued 10 that specifically in the context of Indonesia we call it a PSAK Syariah, because in doing business Indonesia, especially financial institution, they are many of them having major business in this area, and therefore we have this accounting standard specifically created for Sharia financial reporting in Indonesia. We also remove 11 accounting standards that are no longer relevant in the context of Indonesia. So this has been like a major change in 2009 after the commitment in 2008. So you might then curious, what is the percentage, if you can put it in the percentage, the level of conversion of Indonesian accounting standard into IFRS. You will find later on in this slide, but let me go through with the second period. With the second period, this actually most of the accounting standard has been adopted, but we have 1 year gap. 1 year gap means whatever accounting standard released by ISB, then 1 year later we are trying to adopt and implement them in Indonesian context. So as you can see, the business are changing, and many accounting recognition, measurement, presentation, disclosure are changing, and therefore it can be avoided that they until now always issued an accounting standard, always revise an accounting standard, and we follow all the process together all along with ISB. And last month, ISB people come to Indonesia, try to talk about this accounting standard adoption in Indonesia and how far if we have to fully adopt IFRS. And hopefully for the next several years, with benefit or disadvantage or advantage of adopting IFRS, we can fully adopt IFRS in Indonesia. Not all accounting standard, of course, can be adopted in Indonesia because the environment is different, the readiness are different. I just mentioned several things here. As you can see that, number one, first time adoption of IFRS. Of course, we haven't been able to adopt that one because the commitment to fully adopt is not there yet. Once Indonesia fully commit with the fully adoption of IFRS, then we have to adopt IFRS number one. And then the second one, for example, financial instruments. This accounting standard has been released by ISB since 2012 with the application of effective date in 2014 or 2015, but until now it is difficult for us to follow that accounting standard, and as a consequences we delay the adoption of this financial instrument accounting standard in Indonesia. And last week we have just decided to adopt this financial instrument. So 1 year maintaining is not an easy for us, especially for example in this financial instrument context. Whenever we adopt this accounting standard, it has a consequences of, for example, every company need to have like one department that's specifically trying to manage whatever financial instrument they have. They have to monitor the price of that financial instrument. So they have to provide estimation. They have to hire actuaries appraisal to value how much their financial instrument worth. And that's a difficult task for most of companies in Indonesia. And therefore, whenever, hey, if we adopt this one this year, can you apply it? And they said, don't adopt and apply the accounting standard this year. We haven't ready yet. That's most of this industry saying this word. So in that case, we can directly adopt IFRS because the industry readiness is not there yet. In that case, then we delay in the adoption of IFRS. So, and therefore we have some exception in 2014, but some of them now has been adopted. And then what is the next agenda? Most of the next agenda and from the IFRS is like annual improvement, and that's come because whenever accounting standard is set and then company need to apply in this accounting standard, what happens? Sometimes they have a problem in the implementation. When they have a problem in the implementation, they talk back to the standard setter, and the standard setter look at the accounting standard, they make revision, and we create what we call as annual improvement. So that's what happened in terms of reporting. We do create improvement every year based on the implementation of accounting standard. And how we try to improve this accounting standard, we try to improve based on, of course, one conceptual framework. If you have accounting background or business background, you have taken intermediate accounting subject or even introduction to accounting, you will be introduced with this conceptual framework. I won't talk in detail about this, but just to give you an idea, we improved this one, and in the context of conceptual framework now, ISB is also working because this conceptual framework content of principle, content of interrelated concept that are used by standard setter to create accounting standard, or used by preparer whenever they have a problem in implementing accounting standard. So with this framework, and we improved the accounting standard, and now the last one, this background of accounting standard, I want to just give you for a little bit perspective of a comparison how every country have adopted accounting standard, and I choose 6 countries in Asia Pacific where this is interesting because they have different culture in terms of extremely different culture. For example, Australia is like they are Commonwealth country and they have their own specific common law rules or regulation. You have China, and they specifically they have their own culture. India and also Indonesia, Japan, South Korea. So this company has different background in terms of extremely different from one country to the other country. But look at on the right side, I have one icon. This is the research that I had done together with Professor Singgih from the University of Sydney. We identify how every country has progressing with accounting standard, and we choose 2001 and 2014 the level of convergence in those 2 years. So initially, for example, 2001, Australia has the level of similarity between their accounting standard and IAS before, so the previous version of IFRS, with the level of 61. But by 2014 they have 100, because in 2005 Australia have declared they fully adopt IFRS in 2005. Similarly, South Korea also has done the same thing, but they fully adopt IFRS in 2011, and therefore they have 100% in 2014. So how about Indonesia? 60. So look at the right side, yeah. 66 in 2001 and 90%.99 in 2014. Yeah, and the left column, you can see EQ S1, EQ S2, that's the measure of quality of financial reporting after they have adopted IFRS for the preparation of the financial statement. Okay, I stopped this presentation of IFRS background and implementation. Do you have any question before I start with the other thing, especially related to the implementation of accounting standard? Any question? Yep.
My name is Karisma. I'm from University Gajah Mada.
Yep.
When a country fully adopted the IFRS, do they still need accounting standard board, or will there be no more accounting standard board? Thank you.
Oh, that's an interesting question. So that's true. Whenever a country have decided to fully adopt IFRS, what happens is that all the accounting standard authority will be given to ISB. Everything will be like changing in ISB will be like affect to country's accounting standard, and that's when then you have a question. If then the role of standard setting now is given into IASB, so what is the role of local accounting standard? And this is the thing that probably in terms of political process, what we call it, sometimes it's difficult, because whenever like we have an issue in accounting standard if like industry can directly asking into ISP whenever they have problem in implementation, they might not we might not need local standard setter, but the function might be changed. But so far the country like Australia, they still maintain their Australian accounting standard board, but the function of their board it's different compared with the prior period, prior 2005. They in prior 2005 they tried to establish accounting standard based on their own cases on their country, but in this case they just get it from ISC. But then in terms of implementation, because every country still have their own specific issue and problem, then they talk to local accounting standards. So they will be still there, but their function changed from a pure standard setter to become more likely accommodating what happened in this country in terms of the implementation of accounting standard. Right. Any other question?
What do you think is the consequences if a country don't fully adapt to IFRS?
Right. Yes. Before I mentioned there would be advantage or disadvantage in terms of if a country fully adopt IFRS and if they don't fully adopt IFRS. So everything back to economic consequences in terms of what is the benefit if a country decide to fully adopt IFRS. In the context of Indonesia, I can clearly mention it is actually, because it is not really urgent enough to fully adopt IFRS if, as you can see, the fact in Indonesia we only have one cross-listed firm, right? So PT Telkom Indonesia is the only Indonesian company that is publicly listed at United States. So with that case, because the benefit of having this IFRS is like efficient in preparing a financial statement, and with this efficient in terms of less cost of preparation, because if they have subsidiary and all the things, then in terms of cost to preparation for the preparation of financial statement will be less. But cumulatively, Indonesia only have one publicly listed firm. If we look at from the perspective of cross-listed firm, but if you look at the perspective of foreign direct investment, right? Company like multinational companies that are directly invest their funding into Indonesia, creating manufacturing, creating factory in Indonesia, and then in terms of consolidating this financial information become something for them in terms of become efficient for the cost of preparation of financial statement. That's one thing, and therefore in this context, if an investor from the other country or multinational company from the other country wants to invest in Indonesia, because the preparation of financial reporting will be using the same accounting standard, so there will be assurance for them that they're gonna have efficient accounting information system, because they can apply their accounting information system into Indonesian context as a subsidiary. So this will be attracting more investors to come in Indonesia, invest their funding in Indonesia. And the same thing, if Indonesian companies want to also invest into the other country, they have the same opportunity. So if one country doesn't want to adopt IFRS, the consequence is then the burden to invest will be higher rather than if a country having the same accounting standard. Right? So that's one thing that you can see. Similarity in accounting standard create efficiency in terms of cost to cost for the preparation of financial reporting, and therefore that will increase investment in a certain country. So back to the economic benefit. The same thing in the context of publicly listed firm. If they prepare their accounting standard using IFRS, they can publicly list it everywhere, right? Every other country that have adopted IFRS, then you can invest in that country. For their investor, will be like easier for them to read the financial information and decide whether they want to invest in that company or not. So, having said that, Indonesia, for example, one day decided to fully adopt IFRS, then more than 500 companies publicly listed in Bursa Efek Indonesia, Indonesian Stock Exchange, also have the same opportunity to go abroad and funding resources from other country. And the same thing for other country to Indonesia. So this benefit will be able to be obtained if a country doesn't adopt IFRS. Now I come with the implementation issue. Beside the other issue that I have mentioned before, we have one specific issue that based on my experience as a member of Indonesian Accounting Standard Setter, I can share this one to you. And please note that this is only one issue. I mean, there are many other issues. There are many other similar issues we are facing in terms of it's not easy to apply IFRS in a country where they own their own specific circumstances. And in this case, I bring telecommunication tower company. As you can see, if you now using mobile phone, you have your access to internet. Everything is related to the internet. This is actually also related to this tower. More than 90,000 tower has been installed in everywhere across Indonesia. Over 90,000. In terms of company, there are probably 1,000 company organizing this in telecommunication tower business. So, but please try to understand that this telecommunication tower company is different to the one like Telkom or Excel or Indosat. They are provider. But this is a company that provide facilities of telecommunication tower. So their main business is like building this telecommunication tower and list them to operator company. Right? So as you can see here, more than 90,000 telecommunication tower in Indonesia are organized by 80%, where it's actually only 5 companies, but they are publicly listed in Indonesian Stock Exchange. Right? And the issue is that whether this telecommunication tower, everyone sleeping on the backside, probably so tired of yesterday activities. Right. Now, as you can see, only 18% of the company are using property, plant, and equipment or PSAK 16 or IS 16. This is so IS 40 or IS 16 is the reference into the IFRS accounting standard. PSAK 13 and PSAK 16, that's pernyataan standar akuntansi. That's accounting standard in Indonesia. So the telecommunication tower is like this on the left side, that telecommunication tower. Right. The issue is that the way people or industry in Indonesia understand about this telecommunication tower is different from one company to the other company. by definition, as you can see there, the way they read the accounting standard, you can see property, plant, and equipment are tangible items that are held for use production or supply a good or service for rental to others for administrative purposes and are expected to be used during more than one period. So people think this telecommunication tower need to be recognized as property, plant, and equipment because the definition is that. But the other thing, when accounting standard IS 40 is introduced in 2007, people start thinking, oh, telecommunication tower is actually comprised of land and building, right? As mentioned, the definition in this investment property is a property, specifically land and building. Why land and building? Because this is the main resource that are used by company to produce their revenue and they produce their net income, held by either owner or by leasee under financial term to earn rental or capital appreciation rather than the one mentioned in property, plant, and equipment. But indeed, it is comprised of building. If you can see on the back side, there's a building. Land, of course, on the top is a tower, but on the bottom is the land, and therefore people thinking that this is part of company property that need to be recognized as investment property. Now, little bit talk about accounting. Hopefully, you know that you don't get bored with this one. If a company having an asset, so as you might understand, it actually can be categorized as inventory, right? It can be categorized as asset itself, fixed asset, and it also can be categorized as investment property depend on how the company use this asset. The extreme example, as you can see, if you have example of real estate company buying land, if the purpose of this land is for, they divide it and then they have plan to build a house and they sell the house, then you think this is a company inventory, right? But they have plan to build one office. They're gonna use their office as part of administrative purpose. It has to be recognized as fixed asset. And then the last one, if they buy this land, then they have no plan whether they gonna sell as part of, as mentioned before, inventory, and also they have no plan to build something on that. But just thinking about appreciation, capital appreciation, then it should be recognized as investment property, as simple as that. But the definition of investment property by mentioning land or building makes this industry in Indonesia, telecommunication tower, thinking about investment property rather than by nature. If I ask you, should a company where their business is mainly build this telecommunication tower and they rent it and then they have agreement with or telecommunication operator, should they recognize this telecommunication tower as property, plant, equipment, or investment property? Yeah, property, plant, and equipment, because as you can see, they are held in the production, supply goods and service for rental and for administrative purpose and are expected to be used for more than one period. So with this a clear definition is actually industry should recognize this telecommunication tower as property, plant, and equipment. The question is that why, as you can see in the material that I give it to you, from 5 companies that are publicly listed in Indonesia stock exchange, 4 of them using investment property to recognize this telecommunication tower, and only 1 of them categorized it as property, plant, and equipment. There could be something behind that, right? Whether this is about misinterpretation of the definition, or there could be something beyond that issue of definition. As academician, as someone who do a lot of research in this area, I would say there could be something beyond that, and this is the thing that we need to explore together, right? I want to explore this with you together in terms what is the motivation of the company choosing investment property rather than choosing property, plant, and equipment as standard that be used to recognize telecommunication tower, right? So what is the issue? Have a look, and the next accounting standard. So the definition, it is mentioned in the accounting standard, of course, and then talking about accounting standard, it's mainly talking about first recognition, second measurement, third presentation, and the last one is disclosure. So if you can see, thick book of accounting standard is actually only provide this 4 type of regulation: recognition, measurement, presentation, and disclosure. Right? And then it is applied to many account and financial statement. Have a look what we have here. Property, plant, and equipment. It is mentioned in the accounting standard. If you can help me to mention it. An entity shall choose either cost model or revaluation model. Anyone know what's the cost model means? Revaluation model as its accounting policy and shall apply that policy to entire class of property, plant, and equipment. So the requirement is they have to use either cost model or revaluation model. I will describe you what is cost model, what is revaluation model. But you can see from the name, cost is based on historical cost. Revaluation, it's mean based on value. Value means based on the benefit that the company get. Cost mean based on what the company has sacrificed to get resources. So cost model, revaluation model, that the measurement that the accounting use. Cost, historical cost, or value, where normally refer to fair value. Right? Now the next one, it is mentioned, this is the crucial thing that I really want to share with you. If an asset carrying amount, it means that the value of asset in a specific date, that's what we call as carrying amount, is increased as a result of revaluation. So they value the asset based on the most recent data. It can be done by appraisal, it can be done by someone in the company. If the amount is increased, the increase shall be recognized in the other comprehensive income. Please note this one. So the increase shall be recognized in the what we call is OCI, other comprehensive income, and it is accumulated into company's equity. So the increased value of the asset then would have an impact on the company equity. Increase in an asset, increase in company equity, as you have in the accounting equation, it has increase on the left side, it has to be increase on the right side, right? In this case, they have to recognize it and OCI and cumulate them into equity. However, if increase shall be recognized in profit and loss to the extent if the company has done before in terms of there were decrease in the asset value. If they have recognized before the decrease in asset value, it gone to profit and loss. So profit and loss due to the revaluation can be then reversed whenever the assets are increased, right? And then the next one, if the carrying amount is decreased, right, they shall be directly to profit and loss. So there is an increase, it goes to equity through other comparison income. That's what we call as fair value through OCI. But if it is decreased, then we use what we call it fair value through profit and loss. If there is a decrease in asset, they need to put it in profit and loss, but there is an increase, they have to put it in OCI and goes to equity. What happens if they recognize their asset as investment property? If they recognize their asset as investment property, right, after initial recognize, so back, this is for the revaluation, they have to choose fair value method, and therefore they have to revaluate every end of fiscal year to report how much the asset worth. And using the fair value model, any either gain and loss from the revaluation, it has to go to profit and loss. So you can see the difference for the property, plant and equipment. If the increase goes to OCI, if it is decrease go to profit and loss. Here, if there is gain or loss, both of them goes to profit and loss, right? So you might not have you might not have like what is clear issue in this case. I want to have the third slide and the third PowerPoint to show you what is the difference between these two issues. So this is the figure of income statement, right? As you can see, most of investors will look at this income statement to decide whether they want to invest to the company, because from the income statement they can see how is the company's profit. Is it, do they make a good profit? If it is yes, then to have invest to that company. If they lost, no one wants to invest to that company, right? So mainly investor will look at this financial statement, and as you can see in this financial statement, this is the format that it is sales revenue and then gross profit, sales expense, administration expense, other income expense. So you will find this one in every annual report of the company. Right? This is just a formal format that normally company use. Now with this IFRS accounting standard, as you can see, it is claimed that IFRS is high quality accounting standard, and one of the things that has been done compared with our relative to prior accounting standard is that mark to market, talking about most recent value of company resources, and as you can see, whenever company need to reevaluate their resources, then there will be changes in the value. It can be increased and can be decreased. If it is increased, as you can see, it has to be recognized in AOCI in terms of property, plant, and equipment. It is decreased, then it goes to profit and loss. So the previous income statement, I summarized it into this format, but then every company have what we call is of statement of comprehensive income, where this is like more comprehensive information, net income plus other comprehensive income, and then they call it as comprehensive income. So the figure of financial statement become in this format rather than in the previous one tend to be just like in net income. You have other comprehensive income here to accommodate if there is an increase in asset or decrease in asset. If increase, then it is actually gain for the company, but it is unrealized gain, and therefore normally if company revaluate their asset, there is an increase in asset, but it is not realized yet, and therefore the account name is unrealized, right? And it is accumulated into the equity as part of the accounting equation. So the other format will be like this: statement of comprehensive income and an income. It is the same thing. They put other comprehensive income with comprehensive income. So when we are talking about performance, which one do you think that the investor will pay attention? More likely to be here, net income. Why? Because as you can see, this is part of measure of more likely major or main company operation will be captured here. If they have a good company's operation or activities, they will create good income. But here, as you can see, nothing to do. The management do nothing really regarding to this in a sense that if they buy land, okay, this land is increased, but they don't manage it. They're not doing something into this land and just like increase, and therefore if an asset increase, then it just like increase in a company equity, but nothing to do with company's performance. All right. So nothing to do with company performance. I would simplify this issue into, because the mine operation is here, this account is likely just accommodating companies increase in asset as part of increase in equity, but nothing to do with performance, right? So back into this slide, right? I summarize this detail. You have this one with you, together in the paper that distributed to you this morning. But I summarize this one into this comparison. So using PSAK 16 or IS 16 and PSAK 13 or IS 40, you will find that here the major difference will be in this recognition, right? Fair value, gain and losses would come directly to the income statement through profit and loss, but if they use PSAK 16, the implication will be any increase will be recognized in equity. Yes, it is, and every profit and loss is finally goes to equity as part of company retained earning, but normally, as I mentioned before, investor pay attention into net income, and therefore if there has increase in fair value of company asset, then profit and loss of the profit of the company would seems to be better rather than if they goes to OCI. So have a look in detail here. In the case of non-depreciable asset, as you can see here, I give you an example. If a company purchase land and the company elect to use revaluation, so it can be property, plant and equipment. Land is part of property, plant and equipment. If they buy land and they put them as property, plant and equipment, they have to recognize land. And then if they value that land from 1 million and they 1 year later they high appraisal and they value that land again, and the price of the land, for example, 1.2 million, there will be increased to 1,000, and they recognize them as unrealized gain on land revaluation, and goes to the comprehensive income. Stop me if you have a question. Similarly, if you done for equipment, and this context is depreciable asset, you calculate the equipment, you depreciate them over the year, but if you revalue the asset, it has value more than the carrying amount, you need to recognize the unrealized gain as part of company's other comprehensive income. And therefore, in the context of financial reporting statement of comprehensive income, you would have 200,000 and 60,000 from both revaluation of land and revaluation of equipment. Any question? It's clear enough, eh? It's quite simple accounting journal of transaction. Now, and putting comprehensively, you will see again here unrealized gain and losses go to increase in equity, and once again increase in asset, both land and equipment, directly goes to profit and loss of the company if they use PSAK 13. This could be a reason why company willing to choose property investment rather than investment property accounting standard rather than property, plant and equipment, because they can see directly increasing an asset is recognized as part of company's performance, right? It's not just like increasing equity, nothing to do with the performance, but more likely they recognize as profit of the company. So increase in company profit. At the end, of course, when you talk about annual net income, then some of them will goes to retained earnings, some of goes to dividend or other things. But here, at least then you can see the difference. It goes directly to equity, but it goes to equity through profit and loss. And if an investor look at the company performance based on net income, of course, from the perspective of management, they really wants to present it as this could be some explanation. So theory behind this a lot. I will discuss discuss the implication of these things. So because I have started with talking about firm motivation, right? Because I'm talking about firm manager motivation, company's manager motivation, I will directly pointing this issue as part of, right? So in telecommunication tower industry, people in this industry saying it is not clear whether it's PP or investment property because the definition are similar or other things. But behind that, from academician, we can look at the literature, especially here. Let me introduce you with something goes a little bit beyond to the undergraduate degree, but indeed this is something that can explain to you about the motivation of the company. So there is a positive accounting theory, the theory that are built based on positive in terms of using empirical data to conclude something, and the theory is like trying to explain and predict what has happened in the real practice industry in this context of telecommunication industry. And there is a positive accounting theory, and they divide it into three. The first one is what we call bonus plan hypothesis. The second one is what we call as debt covenant hypothesis, and the third one what we call as political cost hypothesis. Some of you might heard about this before, or some of you believe don't, especially the one from visible yet. So what they are saying about political cost hypothesis, what they are saying about debt covenant hypothesis and bonus plan hypothesis. I start with bonus plan hypothesis. As someone in a company, you want to get bonus from like annual bonus, right? Of course, everyone wants to get well paid when they work at the company, and normally the contract between owner of the company, represented by board of commissioners, they reward something based on the company performance, and one measure of this company performance is net income. If the net income figure, then it is likely for them to get bonus, right? So if they can just like put that one as investment property, how it's then impact to their company's this manager bonus? It could be one motivation, and you probably thinking about it, this is just theory. No, I would say first, this is empirical evidence that has been done by many researchers in the context of financial accounting, and established this theory, bonus plan hypothesis. So from the motivation of bonus, then they might choose this property, plant and equipment. From the practice perspective, I'm a committee audit of one state-owned company, and indeed, director of the company tend to choose accounting standard that lead to better net income, because with this better net income, of course, they're gonna get bonus. I don't teach this thing to you. I mean, there is a way to choose accounting standard then that can have a big impact on your take-home pay, and then one day if you work in a company. But this is from the perspective of accounting, then net income is effective from the use of accounting standard. And how about from the perspective of standard setter? You might ask this thing. From the perspective of a standard setter, because we understand in the context of a company, they can create big net income with two ways. The first one, by behaving efficiently. I mean, manager in a company, if they work efficiently, they manage resources efficiently, they done their job in a best way to create net income, they're gonna have good net income. But the other manager is classified as opportunistic manager. They behave opportunistically. They don't work hard, but they want high net income. What they gonna do? Choose accounting standard that lead to greater net income. They done that. So, of course, we don't worry about this efficient behavior of the manager, and we hope, we do expect you one day to become manager and choosing the first way as an efficient manager, not the opportunistic manager, right? From the standard setter perspective, because we have to protect the investor from this misleading, because choosing wrong accounting standard is actually lead to mislead information received by investor. Then we have to protect the investor by, right, create accounting standard that limit opportunistic manager to choose accounting standard that lead to wrong information, right? In this context, if it is wrong, when we say this information wrong, when this information doesn't reflect the real performance of the company, the real resources of the company, what we want is that this accounting standard used by manager, then whenever they prepare the financial statement, they prepare and the information provided in the financial statement truly reflect firm's financial position, from financial performance, from cash flow, right? So that's the first explanation that could we are saying probably people from this telecommunication industry wants better profit and wants better bonus, and therefore they choose property, plant and equipment. That's from research and academician perspective. Of course, if we saying that we send this to them, then no, this is a matter of choosing accounting standard, and what I understand is that we have to choose this investment property, right? But why then? If you can see from the regulator perspective, I have that one. From the regulator perspective, why then? From the regulator perspective, why from the regular perspective they have different views with us in the standard setter perspective. So there is different views from OJK, or Indonesian Financial Service Authority, and Indonesian Financial Accounting Standard Board regarding to this accounting standard. As you can see from the PowerPoint or from the material that I give you this morning, you might read it in detail later, you will find that in September 2015, Indonesian Financial Service Authority released authoritative letter asking every company that are publicly listed in Indonesian stock exchange to use investment property. We didn't know why. It could be from the Association of Telecommunication Tower asking this regulator to release that authoritative letter. Indeed, they are released in September 2015. Why they have to release this? Because as you can see, the practice prior this 2015, one company used property, plant, equipment, and 4 companies use investment property. Putting back to the perspective, maybe one company is managed by efficient manager and 4 company managed by opportunistic manager. It could be, but there's like a theory that need to be seen whether this is correct or not. And you will look at this as part of your assignment, trying to find whether there is a strong link between this accounting standard into net income and how the market price this information. And you will look at this as part of your assignment letter. And back again, why the Indonesian Financial Service Authority accept the request of telecommunication industry to everyone using investment property? Well, from the perspective of standard setter, from the perspective that I asked you before, which one is the correct one? PPA, right? Because they use these resources as part main company operation. Why we should put this one as investment property? As you see, if you have money, if you put your money buying house or buying land, and you do nothing about that, as part of your investment, right? But if you use that resources to as part of your company's activity, then it's your resources. It has to be property, plant, and equipment. Now, again, why then Indonesian Financial Service Authority accept the request from the industry to everyone using property investment property rather than PPA. And from the standard setter itself, in December 2015, so OJK released it at September 2015. Financial Accounting Standard Center of Indonesia released ISAC explaining about this issue and referring it should be recognized as PPE in this interpretation of accounting standard, and we released it in December 2015. So almost in just within 3 years, there are two authoritative regulator releasing, asking different accounting treatment, right? And then the question, then this industry should follow standard setter or they should follow OJK, and they tend to follow OJK, of course, because they are publicly listed at BEE, otherwise then they be suspend or other thing, this care of it. Standard setter, they create accounting standard, but we don't have any authority to push them to implement the accounting standard, right? So most of this company then move to investment property, but then September, 1 year later, September 2015, OJK released new authoritative letter and asking everyone using property, plant, equipment. The issue then resolved. There is no difference between what we require as standard setter and OJK as part of the one who has authority in the Indonesian Stock Exchange. Right? The issue is that probably you are curious whether which one is correct, which one is wrong, but we don't put emphasis in this which one is wrong, which one is correct, but we want to know what is the reason behind all these things. So let's try to understand from the Financial Market Authority. If company using investment property over the year, you can see their profit are increased, right? But if they are required to change their accounting standard to property, plant, and equipment, what's gonna happen? Their net income will drop, right? Their net income will drop, and that's from the perspective of capital market regulator, hard to ask them directly to change from investment property. And in fact, 4 of them are using investment property. If they change it, then if their net income decreasing, and then the market price decreasing, right? And then the industry might collapse. If we learn something about 2008 Indonesian financial crisis, is because of this again. The figure of net income of the company drop, and they might need to anticipate this by not directly asking them to change into property, plant and equipment from investment property, but they tend to delay it 1 year, but in the earlier year they are giving warning that they have to prepare this, right? This in term of, and the long term is actually the same. In the short term, they're gonna drop in the term of their net income. So this become an issue what we call as prospective application and retrospective application. So with retrospective application, what they have done wrong before, they need to revisit again. But in the context, the Financial Service Authority, they ask this company to go with prospective application to reduce the drop of net income of the company, and therefore the impact of the industry's failure will tend to be limited, rather than if they require it suddenly to change from investment property to property, plant, and equipment. So that's the big issue of this accounting standard. So we can see from the telecommunication tower industry, from the regulator perspective versus from standard setter perspective, right? And from the market perspective, again, if you look at the good figure of net income and then suddenly drop, it could be part of company earnings management. And one literature is saying about company management, earnings management. What we are saying about company earnings management, indeed, you will find that every company, we could say, they involve in earnings management, whether with a purpose or without a purpose. Because as you can see, from financial statement or from financial position perspective, for example, you will find financial position, cash equivalent, receivable, inventory, fixed asset. They have their own characteristic, right? Inventory, for example, you can recognize the inventory based on lower cost of net realizable value. You might recognize inventory based on historical cost, acquisition cost. Or you might recognize inventory based on net realizable value. Those options are provided by standard setter. Why? Because the nature of business are different from one company to the other company, right? So we can't push a company by nature they have inventory in that like the change price every time to use historical cost, because when we ask them to use historical cost, what's gonna happen? The information provided doesn't reflect the actual value of the inventory, and therefore there is an option to use different accounting standard, and therefore every company involved in terms of earning management. But the difference, they done it in a purpose of opportunistic behavior, or they done it in the context trying to choose accounting standard that really fully reflect the company's account and company's value in, for example, those inventory. If they use the second approach, it's good, but if they use the first approach, then it's a problem for regulator, and therefore regulator has to protect the investor. And as you can see, many countries now trying to put emphasis of investor protection to avoid the potential opportunistic behavior from manager in a company. Because as you can see, right, changes accounting standard would affect company net income. And in the context of Indonesia, I would say it cannot be avoided. But now, whether earnings management is legal, probably you are asking it is ethical or unethical, there are literature saying a two things. If it is like highly corrected with fraud in terms of doing something opportunistic type to avoid or to hide information for that's part of what we call it company fraud, and this kind of earning management tend to be illegal. But if they done it in the purpose of like choosing the correct accounting standard and therefore trying to fully reflect information what they have as part of their business activity, this kind of earnings management, and that cannot be avoided. But even in the context of literature, we can see some of the literature saying earnings management is actually good thing in terms of providing good information, because whenever they change an accounting standard, of course changing accounting standard can only be done in one time and then continue using accounting standard, but there are so many accounting standards for so many account of company, and therefore choosing one use continuously, but you have another opportunity using the other one or replacing the other accounting standard to have a better reporting. And therefore, as you can we can see from the literature, normally companies' net income would increase or decrease into the level that would be across the border. I mean, I mentioned about here, if you can find, I should write it somewhere, the iron law. So ironing, you know ironing, right? Ironing, you do ironing. If you goes up, it won't be goes beyond the table, right? To make sure everything alright. If you go down, then it won't goes beyond the table. And that's what happened whenever a company choosing accounting standard. It has to be up and down. And in fact, whenever the company like doing earnings management, as I mentioned, they do bonus plan hypothesis. They have motivation to do like earnings management to pull future earning into current earnings. They don't pull it everything in terms of they can pull it, but they have to return it back from the next period. This is like ironing activity, right? What happened? The explanation, whenever the company does earnings management goes beyond the table, that's what happened. That's what you learn from WorldCom. I believe you're familiar with that. Enron case and all other cases. They hide the information to provide good figure of financial statement, but they done it beyond the regulation, and therefore they then collapse because they hide everything, they hide many things, and they don't return it back, and therefore they collapse. Like if you do ironing, if you go beyond the table, then collapse. That's the illustration what you have in terms of earnings management. So changing accounting standard, it happened, it's up and down, but this is more a matter of bringing future earning to current earning or dealing current earning into future earning. Previously, I mentioned about bonus plan hypothesis. That's what happened. Normally people try to pull, right? But in the other case, in the other company, there might be a company has very good performance in 1 year and they are big company. If they just provide everything, what will happen, as you understand, in the tax system in every country, they normally applying what we call as progressive tax, right? The bigger the company profit, the bigger percentage will be applied to get the tax from that company. And if they want to avoid that one, it goes into the political cost hypothesis. They will try to delay current earning to future earning. It means they try to decrease their net income, and therefore they can avoid paying tax bigger than supposed to be. So that's the political cost hypothesis. And the last one, how about the debt common? There are some cases that the company has bigger debt. The figure of leverage is high leverage. Leverage ratio is bigger in terms of leverage divided by equity, tend to be bigger than the other company on average. Then they actually have liability problem. Whenever they have debt, they have contract with bank and they won't be able to loan some more fund if they have bad leverage ratio, and therefore they are trying to again bring in future earning into current earning by choosing several different type of accounting standard. And for conclusion, this investment property and plan, investment property and PPE, property, plant and equipment, where the telecommunication tower is recognized as PPE or investment property, is an option for the manager to choose. And if they do efficiently, they should choose the accounting standard that reflect the actual resources that the company has, but if they do opportunistically, they might choose something that getting the net income figure they want for the purpose probably bonus, probably avoiding tax, or probably avoiding the debt issue with banking. Now, that's the end of my presentation. Okay, if you have any question, please raise your hand. We still have like 10 minutes until 9:30 before end the class. Yes?
Okay. And I have one more question.
Yes, please.
Let's say if the property investment is a loophole for the company to basically not conduct their accounting on an ethic way, in able to create net income.
Right.
So why don't the government still let it continue and not cancel this policy?
It has been cancelled. I mean, the authority has cancelled it by September 2016. So September 2015, they required all companies to use investment property, but then in September 2016, they changed it that every company has to go with PPE. Right. Yes, I mentioned that one into the article. Yep. Thank you for the question.
Thank you.
Yep. Any other question? Yep.
Thank you for the opportunity. My name is Hafiz. I'm from Universitas Gadjah Mada.
Yep.
My question is about the fact that in 2016 the government required companies, telecommunication companies, to use the PPE rule, the IS 16.
Yep.
Since it is mentioned that the company can use either cost or evaluation method, is there any specific instruction from the government to use like certain?
Okay.
And is there because I think that there is a potential earnings management case again in that in those area.
Whether they choose cost method or revaluation method, right? You're right. So here the regulation would saying that the company can choose cost method or evaluation method, and there is no more extension regulation for that. So it is indeed, it is depend on the company. It is given all the authority. If they use PPA, they can just choose cost method or revaluation method. So the government doesn't require you have to use revaluation method. Now it's the authority to choose cost method or revaluation method is given to the company. So you might find that the company use cost method, you might find the company use revaluation method. So, but both accounting standard would surely different if they use investment property, right? Yeah.
Is it possible that in the future we only have one approach to a standard in the accounting, and don't investors know already about the reason behind the numbers of every methods?
I would say it is impossible to have one accounting standard or one option for like, because as I mentioned before, as you can see, if you look at the financial position, cash equivalent, or receivable, inventory, going down again into intangible asset, right? Every company has their own nature, and they have different type of business. They have different type of, say we're talking about inventory, it will be different inventory for one company to the other company. And therefore, from the standard perspective, then we provide several options that hopefully that can accommodate what the company wants in terms of really accommodate what the measure that they should use, right? So then because this differences across company, then I would say it is impossible to have one accounting standard. But you can see in the context of international accounting, I haven't mentioned this one before. International accounting standard both use principle-based method, like rather than rule-based, right? And as you can see in the United States, they have USGAAP, and until now they have rule-based, what we call rule-based, and they rule very detailed in accounting standard. They, for example, talking about lease, if talking about consolidation, if a company has like ownership below 20%, etc., and then they have to use this method. It is clear. The option is several, but it is clear, just like a rule. Apply those and use these rules for the preparation of financial statement. But in the context of international accounting, it is actually principle based. So what the IFRS doing in this accounting standard, they provide a principle like more related to a like concept rather than rule itself, and therefore in every nation, even they apply the same accounting standard, in terms of application it could be different because the accounting standard is a principle based rather than rule based. So in addition to my answer before, it is impossible to have one accounting standard, even not talking about principle based. Applying one principle could be different in one country to the other country. Okay, if you don't have any other question, hopefully you have learned something with me today regarding to financial reporting, and thank you, and see you again next time.